Hello, and welcome to Tax and Tech, a Deloitte podcast focused on helping you navigate the ever-changing tax technology landscape through insightful conversations with Deloitte technology leaders. I'm your host, Emily Van Vliet, a partner in our tax management consulting practice here at Deloitte. Hello, everyone, and welcome to our latest episode of Tax and Tech, which is our Deloitte tax podcast focused on all of your tax technology needs and issues. Technology has just been advancing so rapidly that it can be a little bit hard for tax leaders to even feel like you're keeping up. And so that's why we've created this podcast to really give you insights through conversations with some of our Deloitte tax technology leaders to help you navigate that shifting landscape and ultimately help you chart your tax department's digital future. So today we are focusing on the topic of U.S. indirect tax, so sales and use tax primarily, and I am very pleased to have on the podcast today two of our subject matter experts in that area. We have Holly Hamby on the line. Holly is a managing director in our tax management consulting practice and does a lot of interesting work in the indirect space. And then we also have Lindsay McAfee. Lindsay is a senior manager in our multistate tax practice. And Holly and Lindsay, I know, team together a lot as we're, working with clients in the market. So it is great to have you both on the line together to help us with a joint conversation here today. So why don't I probably just ask Lindsay to give us a little bit of background around the market right now. I know I have heard a lot about Wayfair, and I believe that a lot of the technology challenges that our clients are facing in this area today are driven by Wayfair and marketplace legislation. Could you, Lindsay, just give us a little bit of background on those issues and help us understand what that really means?
Sure, absolutely. And thanks so much again for having me on today. So a couple of years ago in 2018, which feels like eons ago now, the US Supreme Court gave us a new rule, some changes in the indirect tax landscape in the United States. And this was a pretty groundbreaking, earth-shattering things for those of us in the indirect space. And so what the Supreme Court did is they changed the rules from us. Previous to Wayfair, which was the name of the court case, South Dakota v. Wayfair. Prior to Wayfair, the rule in the indirect tax space or the sales and use tax space was that companies that had a substantial nexus to a taxing jurisdiction, so a state or a locality in some instances, were subject to that taxing jurisdiction's sales and use tax rules. And prior to Wayfair, substantial nexus meant people, property, or physical presence. What we've been seeing, what we saw with Wayfair and what we've been seeing since the court issued its opinion is that states have redefined their nexus rules, meaning that having a substantial nexus with a state such that you're required to collect and remit sales tax on your sales into that state isn't just based solely on your physical connections, but also your economic activity. So a certain threshold of sales volume or sales dollars. And so that's the side on Wayfair. When we talk about Wayfair, when we talk about the fallout of Wayfair, we're talking about more and more retailers or sellers having to know what the tax laws are in new jurisdictions, collect and remit on those sales. And they may not be used to doing that. They may used to only be filing one return in the state where they're based. Now, depending on their sales volumes, they may have those responsibilities in lots of jurisdictions. When we talk about marketplace, it's important to note that there is the nuance between the two. Marketplace rules are really around requiring online marketplaces or even, not online marketplaces to collect and remit sales tax on behalf of the sellers on their platforms. And so it's not directly related to Wayfair, but it was happening at the same time. When states were changing their laws related to the rule change in Wayfair, they also thought, we want to encompass as many sellers as we possibly can. So they also enacted these marketplace rules requiring the marketplace operators, who technically are not the sellers of the things on their platform, to have a hand in the sales tax there.
Okay, I see. So those are really two developments, right? Two different developments that both have the impact of expanding requirements to collect and remit sales tax in a way that maybe these taxpayers hadn't been tackling in the past.
Exactly. We see two different ways, like you said, that companies, or sellers or marketplace operators now have to pay attention to lots of different rules in lots of different states. And sometimes a marketplace or a company will be impacted by both the marketplace rules, because they may have some marketplace activities where they operate an online marketplace. They connect buyers and sellers through their online platforms, and they may also make their own sales directly to customers. So companies are having to deal with both, but it is important to know that they are not the same thing.
Okay, perfect. Thank you very much, Lindsay. And Holly, why don't we pull in your perspective, if you kind of put, your technology hat on, what does this really mean for companies in terms of, technology and maybe also business process? How do you see that playing out?
Yeah, thanks so much, Emily. I think when often I talk to people, I say, if you take off your tax hat for a minute and put on your consumer hat, the way that consumers shop now is dictating a lot of the change that we see as tax professionals. I like to give an example of earlier this year, I bought a 15-year anniversary gift for my husband from a website, a marketplace that connected me with a group that sells these type of 15-year plaques that are special custom made for your spouse. And they're at a group in Chicago. Well, 3 years ago, this small company, this boutique in Chicago would not have been something that I would have, a consumer in Houston, Texas, been connected to. But the marketplace has connected us as consumers. But from a tax implication perspective, that small little Chicago boutique that was only doing taxes remotely now has the burden of how to do that. And so as they get on the marketplace takes on those responsibilities. It now has, like Lindsay said a second ago, tax responsibilities for all jurisdictions in the U.S., outside the U.S. With that comes the responsibility for exemption certificates, the responsibility for audits, the responsibilities for filing, collecting, and all of those things are really driving the technology angle as well on that.
Okay, so needing technology in order to respond to those new requirements is really where the need is?
Yeah, because if you can imagine, if you are that consumer, now you went from Chicago tax rates to now you need to have tax rates in every parish in Louisiana and every little local jurisdiction in Alabama to California. And the nuances of all of those, depending on if the services you're providing. If you're a company or a marketplace that's facilitating not only tangible personal property sales, but you're also doing service sales, the taxability and all those requirements that your e-commerce platform now has to be able to provide and calculate accurately.
Okay. So sounds a bit like a brave new world in terms of the level of requirements, right? So how are we seeing companies struggle in responding to that right now?
Sure, I'll start with that. Where we see companies struggling are, one, understanding the rules outside of their own jurisdiction. There are very few states, I should say, that are uniform. Like Holly was saying, the taxability of the same item is likely not going to be the same in every single state that imposes a sales and use tax. There are 46 states plus the District of Columbia that imposes a state level sales tax. there are several thousand jurisdictions that also impose their own type of sales tax or transaction tax on top of that. So it can be very tough to even know where you might have the responsibility. Where do you have nexus? What are the rules in having nexus? Well, what is the taxability on top of that? And it's not just those two things, right? We're not just looking at nexus and taxability, though those are the two really big questions. After that, you have to deal with, well, what if my buyer is exempt? Or what if the item I'm selling is exempt? If I sell groceries on an online marketplace, what's the taxability? Are they taxable or not? Lots of those types of things come up, and there's a lot of work, a lot of analysis that has to be done there. And then on top of that, sales tax is a very automatable tax or data-driven world. And so that's where we team very well with Holly and her TMC team, because there's so much risk that you can take away if you set things up in the proper way so that technology is doing the heavy lifting from a day-to-day perspective, so that our colleagues, tax professionals, can only be involved in the value add type situations or problems. But so to sort of bring this back, where we see people struggle is understanding the technical basis for this all, and then making sure that their systems and their technology is ready to automate it in the most efficient way possible.
Now, Lindsay, I think that you articulated that really well. Seeing the same thing is there's the struggle with understanding there's a tax technical need, but then there's the speed of change. There's a push and a speed to get to market that we see as well from a technology perspective. So unlike maybe projects in the past where you had time to look at the tax technical and then go to your technology platform and evaluate, we're seeing those things happen often in parallel, or even in parallel or even ahead, because they're needing to get to the market.
Yeah, I'm really starting to get a better sense, Holly and Lindsay, for why you guys are working together so much, trying to solve these problems for our clients, right? It really does sound like there's a significant intersection of the tax technical, how you interpret those rules, and then how you pretty quickly try to translate that into technology to, as you guys have said, really start to handle the heavy lifting of the day-to-day calculations. So I'm also, thinking these changes have been out there for a little while, right? Probably about 18 to 24 months. So companies have already, been on the journey to an extent. They've been working on reacting and solving some of those challenges. But what do you see at this point as next for most of our clients?
Sure. So what's next is getting the technology in place. I think, as you said, the changes, we've lived with them now for about 18 to 24 months, and we've been trying to prepare everyone for that, long before the court opinion came down in Wayfair in June of 2018. States have gradually changed over their rules in that time period. Some states went live right away in 2018. Some are just going live now in 2020. And so what is next is we're seeing companies actually have to put things into play now, go live with their systems, assuming that they've taken the steps they need to get a system in place. And so now we're seeing companies actually having to file returns. We're seeing companies turn on tax. We're seeing them charge tax on their marketplaces. We're seeing them, deal with customer complaints or customer problems relating to how the technology is working on their platform, relating to how they've set it up. So we're having to fine tune those types of things. We're seeing the business pay attention to what's going on in sales tax. But this is a front and center issue right now. And what that means is that in a couple of months, we're going to see more and more states send out audit notices for marketplace compliance. We've already seen a couple of states for our larger marketplace companies, try to do short period audits or things like that to make sure they understand what's going on. But I think something that, that often gets lost in these conversations, we know that the technology side of things, what we often fail to appreciate is that on the state side, they pass these laws, they sign them, they try to implement them, but they may not be quite ready on the technology side themselves. And so even though we may be doing the best we can from a compliance standpoint, from a data management standpoint on our side, if and when the states are asking to audit, they're not quite ready to handle the volume of data on their side that comes through. So what's next is unfortunately probably more uncertainty, and working with the states in a collaborative way to get everyone to the point where they want to be. So working with them to make sure that the process gets laid out in a very helpful way for both parties involved, I think is what we're working on and what we're focused on.
Great. Yeah, and that's another interesting aspect of this that you've just raised, right? The fact that the tax authorities themselves have to be ready for this change, and it sounds like maybe that's a struggle. Holly, how about for you in the technology space? What do you see as the next step?
The next steps have been really fascinating to me. I see a lot of, especially our larger marketplaces, really focusing on ease of entry for customers on the marketplace and risk mitigation. And they kind of go hand in hand, because if you look at it, let's say you're onboarding someone to your marketplace and you want to know where their Nexus profile is. So you want to make it pretty easy for them to say where they're registered and see if it aligns with where you currently are registered, right? The other thing is exemption certificates. Where are their certificates? How do they create that so those consumers can get that? The other thing is item and product category. We've seen a ton of work around this area to try and figure out, because if you're onboarding onto a marketplace and you potentially may have some goods that you sell that they don't have on their marketplace right now, it's figuring out where does it align, and then where do we agree on taxability. There may be that you're selling your goods on your own e-commerce platform and on a marketplace, and your tax your tax decision doesn't correlate. And so during those situations, you want to get to that as soon as possible and have those conversations about how that's going to occur. We have plenty of clients that end up having conversations about that. You may even have a situation where you're on an e-commerce platform of your own and you have one third-party software calculating tax. You're on the marketplace and they're using a different one. And maybe because of the different jurisdiction IDs, there's sometimes a difference in the tax that's calculated. And so understanding those and mitigating where there's risks, I see a lot of companies really focusing on that. I've seen some good bots built. I've seen a lot of Alteryx and a lot of different things. And even AI put around item category processing and understanding when they're consuming those files from the marketplace, the company, that they're allowing that to filter back through those categories in an automated fashion. So it's learning. And then the last thing I would say is our third-party tax vendors, we have seen them make adjustments to their platforms, adjustments to their returns to understand and adjust to this marketplace and this new segment of consumers for them, to where their software is helping them distinguish when they are collecting on behalf of someone versus collecting for themselves, and how that remittance stream can be processed easily and distinguishable. Because if you're collecting tax on behalf of one of your marketplace sellers, you don't want that to get commingled with your own at the end of the day. So creating a better process within those software engines to where it can assist with that.
Okay, great. Those are all really good observations, Holly. And I'm just noticing as well that there does seem to be, trends here that I think we've heard around other topics and other episodes of this podcast, right? There is the third-party tax software that can absolutely be an element of the solution. Mm-hmm. But at the same time, we are seeing companies also take automation maybe farther, maybe applying it to different types of challenges through using things like data wrangling tools, robotics, AI, things of that nature.
Yeah, absolutely. Seeing a lot of it.
Okay, great. Well, I think that we will go ahead and wrap there for today. Holly and Lindsay, I just want to thank you so much for joining us and having what I at least found to be a very interesting conversation. So thank you for your time and for sharing those insights. I'd also like to thank everyone who is listening in to our podcast today. Thank you for joining. And I would encourage you to subscribe to our Tax and Tech podcast wherever you consume your podcast content. Go ahead and subscribe so that you don't miss any of our episodes. We are working on episodes now around some of those emerging technologies. We're going to have a very interesting conversation coming up around the application of AI in tax. So please keep an eye out for additional episodes to come. So until next time, a big thank you to everyone listening. I do hope you'll join us again as we continue to chart the tax department's digital future on another episode of Tax and Tech. Thank you all very much. And finally, I would encourage you to subscribe to our Tax and Tech podcast series wherever you are listening in today so that you don't miss any of our episodes. We have episodes coming up around cloud ERP systems, tax technology updates related to U.S. tax reform, and many other timely topics connected to tax technology. So a big thank you to everyone listening in. I hope you will join us again as we continue to chart the tax department's digital future on another episode of Tax and Tech. Thanks very much.